Welcome to Crops, Cattle, and Charley. I'm Charley Martinez, and I am joined today by Aaron Smith and the University of Tennessee Livestock Economist, Dr. Andrew Griffith, who is with the Department of Agriculture and Resource Economics. Today, Dr. Griffith is going to be discussing the strength in the slaughter cow market. So, Andrew, what are some of the driving factors behind the slaughter cow market?
The slaughter cow market has always been driven by the demand for lean beef, Charley. And the lean beef demand, we have slaughter cows, which typically are about 90% type lean beef. And then we have our 50% lean beef that comes from trim, from fat cattle. And then we import a lot of lean beef. And all those beef products are going into the ground beef market in some form or fashion. And since we've gone into this pandemic situation, we've got more people eating at home. That has put even stronger demand on ground beef products, and with that, we've really seen a strong demand for this grinding beef from slaughter cows. We had a dairy industry that was killing cows left and right because of lowered milk prices. Well, that has slowed a little bit because milk prices have improved some. So now we have fewer dairy cows getting into this mix. We've actually had strong slaughter levels on beef cows, but despite those strong levels, the demand for grinding beef or ground beef by the consumer has just it's just surpassed that supply there. So we've seen strength continue in that market. That is the defining factor right there, just ground beef demand. And that is what's driving this slaughter cow market, on top of the fact that we've slowed down dairy cow slaughter a little bit.
So, Andrew, what can producers expect when taking slaughter cows to market this fall?
Well, that's a great question, Aaron, because generally the fall time period is when we see the highest marketing rate of slaughter cows. And that's because we have producers that are weaning calves and taking calves directly to market. So at the same time that they wean their calves and take them to market, they take their cows that have bad feet, bad mouths, bad udders, they're just getting old, whatever reason it is, they tend to put them on the same trailer and haul them to market at the same time. And so we generally have a flood of those animals, which really depresses prices for slaughter cows in the fall time period, mainly being the end of September through the end of November. Will we see that run again? Sure, there's no doubt. There's still going to be those same culling type practices when prices are in the fall, which generally depresses prices severely. Those increased marketings will soften prices some, but we have had such a strong price throughout this entire year, and with no end in sight of the pandemic world that we're living in. I think we're going to continue seeing people eat at home, so that's going to continue to mean strong demand for ground product. So I expect this slaughter cow market to remain elevated. Do I think we'll see these breaking and boning type cattle go below 50 cents? I really don't think so. I think we'll hold on to 50 cents or higher. The thing is we've seen mid 60s this year, so there's a lot of dollars lost between mid 60s and 50, but there's even more. I mean, there's still, when you go generally, we could expect these prices to maybe even move down into the mid 40s. $5 times a 1,200 pound animal would be $60 more. So we're probably looking at $60 higher values per animal this year than what we normally would.
Awesome. Well, good stuff, Dr. Griffith. And thank you to the viewer for watching us and joining us on this episode of Crops, Cattle, and Charley. We hope that you liked it. We hope that you'll join us on the next one. Thank you.